You got a pen? Let me get a pen. Mm-hmm. Can you believe I did that today? What's up, family? Everybody that's coming on, I want you to hit that like button, hit that share button. Tag Lolly Dolly, everybody. Tell them Prophet Ramone is live. The Ramonepreston show is live. I got something very, very good that I'm going to be talking about today, so I want you to hit that like button, hit that share button. YouTube, Facebook, Twitch, Periscope, Twitter, LinkedIn, Mars. I don't care where you at. Please hit that tag, hit that share, hit that like. Shout out to all our tribe members, all of our entrepreneurs, all of our business owners. If you are an entrepreneur, if you're a business owner, drop the name of that business, that ministry, that organization in the comments. Hit that like button, y'all. Shout out to the 1K Few family. That's where that jam is. They are Atlanta based. Good afternoon, ladies and gentlemen. Welcome again to the Ramonepreston show. Even though I don't have my background set up for the Ramonepreston show. And my God, I've been like 10 minutes late for the last couple of days, y'all. That's what happens when you improvising. But nevertheless, we on chill. Yeah. We out here in these internet streets, making it happen. Good afternoon to all of you, whether you're on Facebook, YouTube, Twitch, Periscope, Twitter, LinkedIn, Mars, or some other audio or video-based platform. I appreciate all of the love, the support, the feedback. Every time you hit that like button, every time you hit that share button, every time you tag Lolly Dolly, everybody, you giving us an opportunity to move through those algorithms so that people can hear what the Lord is saying through Prophet Ramone and the Ramonepreston show concerning biblical economics. That's what this show is all about. Of course, as a prophet of God, I have a spiritual assignment, but I also have an economic assignment to help you, your family, your church, your business, your community, your legacy get to their prophesied place. And so that's what we've been doing, and it's been extremely amazing for the last few weeks since we've really been hitting hard in that 12 o'clock window, Monday through Friday. We've had some extraordinary feedback, especially our YouTube family. Facebook, I gotta tell y'all now, YouTube, they acting up over there. We got a lot of YouTube family members, tribe members, friends from far and near who are really reaching out and who are really engaging to be a part of the Ramonepreston show. They're giving us a lot of feedback. We're getting a lot of questions. We have a lot of people that are coming from YouTube that are joining our Blueprint Game Plan program, which is our 5-step wealth building system, teaching you all things concerning financial literacy, entrepreneurship, business ownership, investments, and family legacy wealth building. I ain't gonna throw y'all under the bus now, Facebook, because y'all been showing love from the time we started the Ramonepreston show, and even when we transitioned into our Monday through Friday 12 o'clock noon show. So thank all of you. Today we're going to be talking about the 3 income categories for tax purposes. The 3 income categories for tax purposes. Listen, y'all, this is by far one of the most complicated and critical topics for everyone who generates income. So if you're generating income, if you're making money on whatever level, if you got money coming into your life, then you fall into one of these 3 income categories for tax purposes. And I truly believe that this is a very misunderstood topic because if you don't understand the tax part of your income, if you don't understand the role that taxes play in your income, then you're probably not clear on understanding how these 3 income tax categories for tax purposes work, so that you can fall into the right one, or at least find yourself working towards getting to the right one. So how many of you know what the 3 income categories are? How many of y'all want to take a shot at it? How about you? Do you know? So somebody over here got a cheat sheet. Somebody beside me, I ain't gonna call no names, but somebody that works in my office has a cheat sheet. And so, somebody got a cheat sheet. So how many of you actually know what the 3 income categories for tax purposes are? Anybody knows? If you don't know, now you know. In my Biggie Small voice. Shout out to T. Lynn Composition, LLC, Chase by Choice, LLC, The Daughter's Place, Incorporated. Shout out to all of you that are coming on, all my entrepreneurs, all my go-getters, all my W-2 workers, all my individuals who are out there really doing what you got to do to make it happen. So we're talking about the 3 income categories for tax purposes. That's the key clause in this discussion. These 3 income categories for tax purposes. Most of the people that I talk to about 3 income categories for tax purposes, they think of different types of income. That's what they think of, different types of income. How many of you want to take a wild guess on what those 3 income categories are? Or what do you think one of those income categories are? Shout out to Anointed Home Healthcare, LLC. I'm looking at Facebook right now. If we have anybody on YouTube, if you have a business, if you have a ministry, if you have an organization, drop the name of your ministry, your organization in the comments. We'll give you a shout out. Amy, shout out to you. Thank all of you for coming on. The 3 income categories for tax purposes. Why is this important, Prophet Ramone? Because we talked about it Monday and Tuesday concerning financial literacy. If you were a part of the show yesterday and Monday, you might remember or recall that I explained to you that financial literacy is about you understanding the economic process for how money is made, how money is managed, and how money is multiplied. How money is made, how money is managed, and how money is multiplied. So in order for you to become financially literate, you have to understand the economic process of how money is made, managed, and multiplied. Once you understand the basics of financial literacy, then you're able to develop you're able to develop a financial plan. It looks like somebody hit it on the head. That must be one of our Blueprint Game Plan members, number 1. And I know for sure, Ashley Davis, you are not only a Blueprint Game Plan member because you have our ultimate all-in-one, ultimate mogul Blueprint Game Plan, but you are a very avid student of our university. So you are absolutely correct. Passive income, active income, and labor income. Those are the 3 income categories for tax purposes. So that's what I'm going to be talking about today and explaining to you what they are and why they are very important for you no matter where you are. If you are generating income, you really need to know about these 3 income categories so that you're not losing it. So back to my point. Financial literacy is understanding the economic process of how money is made, how money is managed, and how money is multiplied. So as you develop a better relationship with financial literacy, which means you start learning more about how money is made, how money is managed, how money is multiplied, then it pushes you to what we talked about yesterday. It pushes you to a place that you're now starting to respect money differently. You're starting to make different money moves, and you develop what we call a financial plan, which means you start doing the math on your actual current quality of life, like where you are right now, how much you actually making, how much you actually spending, and where you need to work on finding new money and minimizing your expenses and so forth and so on. The reason why today's discussion on the 3 income categories is so important, because once you start making the money, if you don't understand income categories for tax purposes, all you're going to be doing is losing more money the more money you make. This is the problem that a lot of people have. It's just like if somebody says, I need to make more money, so I'm gonna go get a second job. The problem with just going to get a second job or just doing anything for making more money is because they don't understand financial literacy, more specifically the income categories for tax purposes. They go get another job, they make more money, but guess what they also doing? They paying more taxes because they don't understand income categories for tax purposes. So these are the things that you have to learn. You don't have to be an expert at this stuff. This is the reason why I created, well, one of the reasons why I created our Blueprint Game Plan, which has what I'm talking about in it. We have 3 financial literacy courses in our Blueprint Game Plan program, okay? And one of our financial literacy courses is centered around the ABCs of financial literacy. One is centered around creative cash flow strategies. One is also centered around steps to financial freedom. But all of them discuss the importance of income categories so that you can understand the role that taxes play in your income. Because if you don't understand that, you might be out there getting the bag, so you learn how to make money. You might be out there getting the bag and you learn how to manage money. You might be out there getting the bag and you learn how to multiply money. But the problem is you're always going to be limited in how much you make, how much you manage, and how much you multiply if you don't understand the role that taxes play in that money that you're managing, making, the money that you're managing, and the money that you multiplying. So Ashley, thank you so much for getting the question that I asked correctly. I asked the question, did anyone know what the 3 income categories for tax purposes are? Because a lot of times when I ask people or when I talk to people about income categories or financial categories, they typically tell me types of income in terms of like streams of income. But this is not the way tax experts are gonna look at the income you make. So when you think of income categories for tax purposes, what you're thinking like is a financial expert. You're thinking like the accountant is gonna think when they're doing your income taxes, when they're filing your paperwork, which is where we are right now at this time of the year. So a lot of times you'll go out there and say, oh, I got passive income and I got this type of income. Or I got portfolio income. You're talking about types of income. You're not necessarily talking about income categories for tax purposes, only to find out that when you go to the tax person and they tell you that this is what your tax rate is, and you like, how is that my tax rate? I made that money through my business. I thought I was supposed to be paying less taxes. Well, your income is categorized differently for tax purposes. Even if the type of income you made is different on your end, it doesn't necessarily mean it's going to be viewed or categorized that way on the accounting end or the tax end. And that's where these three income categories are very, very important, because when you understand them, now you understand that the income you make, the money you make, the bag you out there getting, or the bags you getting, they're going to be categorized differently for tax purposes. It might not be categorized different for your purpose or for the purpose of that deal or for the purpose of that business or entrepreneurial endeavor, but for tax purposes, that income is going to be categorized differently, and it's going to be categorized based on how the IRS views that income. You can't change that unless you do something different on the front end. Because once you get to the back end, and a lot of y'all know what I'm talking about, that's why every year, especially at the end of every year, I talk to everybody about making sure your books are right, making sure your accounting is up to par, making sure you balanced all your income and expenses. I talked about this yesterday, and I talked to people about this all year. Clients that we talk to, whether it's in business or clients that we talk to in real estate or even investors or developers, we talk to a lot of different clients on different levels of business, but we have the same conversations that you gotta stay on top of your income and expenses, and this is one of the main reasons why you wanna stay on top of it. Why, Prophet Ramone? Because your income is gonna be, your income is gonna be categorized. Hold on for a minute, y'all, I got a little glitch here. Your income, wow. I'm struggling for real, ain't it? Is that it? There you go. Excuse me, y'all. I'm playing the cameraman today. Me and my daughter, we in here playing. We in here trying to build a new studio while my cameraman is handling some business, and so y'all got to excuse me. I'm working on like 100 things. There you go again. Yeah, I'm here. Huh? There you go. Yeah, y'all know I rig it up. Y'all know I be rigging it up. I'm gonna use a more dignified word. I be Jimmy rigging it up. You Jimmy rigging it up. That's not what we say in the hood, but since we on a public platform, we gonna keep it real bougie. So anyway, let's get into these three income categories for tax purposes. Are y'all ready? The first income category for tax purposes is labor income. Labor income. Now remember, I'm talking about income categories for tax purposes. I'm not talking about income categories for our purpose or for business purposes or types of income. Because I know if you've read books like Rich Dad, Poor Dad, or if you have read other books or you have learned other lessons about financial literacy, you may have learned that there are 7 streams of income, there are 18 streams of income, there are 4 streams of income. I'm not talking about streams or types of income. I'm talking about income categories for tax purposes, which means you can have 100 streams of income, 100 different types of income that you got coming into your life, into your business. When you get to the tax person, like a lot of us are gonna go to the tax people this year, all right? Whether it's for your personal taxes or for your business or for your independent contracting, they're going to categorize different types of income for tax purposes. But you got to know this, because this is going to help you make more money, manage more money you make, and multiply money. This is why we hear things like, oh, the rich get richer. Wealthy people always getting wealthier. How they always coming up? You know why they always coming up? In a lot of cases. Some cases it ain't true, but in some cases, the reason why people who have money or who are millionaires or wealthy continue to move forward, because they understand the game. They understand the system. So when we think about the game or the financial game or the economic system, we're thinking, we got to think about they don't just understand the game of making money. They also understand the systems that are connected to the money you make, banking and credit and assets, liabilities, and the power of leverage. But they also understand taxes. They understand that if they can categorize certain income that they got coming in a certain way for tax purposes, that it's going to minimize their tax liability, which means it's going to leave more money in their pocket. I'm giving you the gizame. I'm giving you the gizame. There are a lot of people who ain't going to be talking about what I'm talking about. I'm telling you, there are a lot of things that you hear about taxes and income categories and types of income on the surface, but when you get to the nitty-gritty, I'm talking to you from a perspective of what I have known because of the people that I am connected to as a business owner who wants to be in the know. So I'm not just connected to CPAs and accountants and tax strategists and lawyers just for them to do a job for me. I'm connected to them because I'm asking questions. So when I got a question, I'll text my tax strategist, I'll text my CPA, I'll text a lawyer. Hey, what do you think about this? How does this work? Like, what do you do in a situation like this? So I've done that for years because I want to be in the know. Even if I'm not the one doing it, even if I'm paying them to do it, I'm still eager to be in the know so that when I start making money or when a certain type of money comes in, I know how that money is going to be viewed for tax purposes. So I'll know how to move that money in a certain vehicle so that I can minimize my tax purposes. Yeah, Tony, that was for free. All right, so the first income category for tax purposes is labor income. I'm going to simplify this. Labor income is W-2 income. This is income that you labor for, all right? So when you think of labor income, you think of W-2 income. Now, this is the highest tax category. This is the highest tax category. Prophet Ramone, why is labor income, W-2 income, the highest tax category? That's just the way it is. That's the way the tax system is set up. So the labor income category is the W-2 income category. Now, let me explain to you some of the reasons why this is the highest tax category. One of the reasons why is because you're working for a business or for a company that is being incentivized with tax benefits to provide you a job. All right? So the business or the company you work for is being incentivized because they are providing for you an opportunity to make labor income or to be a W-2 employee. So because you're not taking the risk, and these are just some of the reasons that I want to explain to you, because you're not taking the risk, which means you're not risking your money, you're not risking your retirement, you're not risking your future, you're not risking unemployment taxes, you're not risking state taxes, you're not risking issues with the Department of Labor. See, when somebody is running a business, I'm talking about a legitimate business. I ain't talking about somebody who's just doing work on the side. When you're running a legitimate business, like and I'm not bragging, I'm just explaining to you, these are the things that you have to learn. When you're running a legitimate business, you have to pay unemployment taxes, you have to pay for your employees' health benefits, you have to make sure that their taxes are being paid or taken out of their payroll. You're gonna have to match that payroll tax. So whatever the taxes are that they're paying, you're pretty much matching it. So whatever taxes that are coming out of that employee's paycheck, you're pretty much matching that. For Social Security, for FICA, for unemployment taxes, federal, state, you're paying the same taxes. So it's very expensive, and the cost associated to hire people to make labor income is high. Okay? Because now you're responsible for that person's livelihood, but you're also responsible to make sure that this individual is being taken care of with their benefits. There are certain employment laws that govern someone who is hired. So what I'm saying to you is the labor income category is the highest tax category, not just for that reason, but some of the reasons are centered around the fact that it ain't no risk. Like if you get a job and you don't want to work, guess what? You just call in, right? Or if you just got something better that come up, what you do? You put your notice in, if you put your notice in, and you quit. You know why? Because you are making labor income. So there are a lot of reasons why you are being taxed at the highest level. Now, it shows on your W-2, not your W-2, but it shows on your what do you call it? Pay stub. Yeah, I got to get the words right. Woof.
You ain't worked in a year.
I know I ain't worked in a long time. I was fired from my last job in 2001. Right. I got fired. Yeah, they fired me. Like, yeah, dog, you can go. We don't need you no more. But anyway, your pay stub is your financial statement. So when you are a W-2 employee making labor income, you don't have a financial statement, a profit and loss statement like a business or a company does. Your financial statement is your pay stub, okay? So you are a W-2 employee. But if you look at your financial statement, or in other words, if you look at your pay stub, what comes out of your pay first? If you are a W-2 employee, what comes out of your pay first? Somebody put it in the comments. What is the first thing they take out of your paycheck when you are a W-2 employee making labor income? What is the first thing? So your pay stub, your financial statement is going to show gross income on the top, then it's going to show net income on the bottom. That's your take home pay. And then everything in the middle is what? Taxes. Yeah. Exactly. So you are the highest taxed because you're the only income category that's being taxed first. But guess what? You're the only income category that has the lowest risk. You ain't carrying no risk. It don't make it fair the way the system works now. Don't get me wrong. Because all of you that work jobs and all of you that's out there grinding and hustling, you keep these businesses going. You keep these companies thriving. You keep these communities doing what they're doing. Like there is no way I would be able to do what I do every day if I didn't have really good people around me who are willing to maybe put some of their dreams aside or maybe put certain things on hold to make a living and to make income for themselves. So we don't downplay how important it is. We're just saying for tax purposes, this income category is going to be the highest tax, which means when you get your pay stub, which is your financial statement, the top of that pay stub is going to be gross income, and everything in the middle, before you get your check, everything in the middle is all taxing. This is how they taxing you. They everything, all kind of taxes. You paying everything. But remember, a lot of those things that you're paying in terms of taxes between your gross income and your net, we're paying as well. We have to match that. So when I give you a check as a W-2 employee, or I give you your pay stub every week or every 2 weeks, whatever is in the middle between your gross and your net, I'm paying some of that too. I have to match that. So I've got to send that, whatever I'm taking out of your check, I got to send that plus my part to the Department of Revenue, to the state, to the federal government for unemployment, for your taxes. I have to do the same thing. So I'm basically carrying the risk. You get to come in for 8 hours a day, 40 hours a week, or 60 hours a week, or 32 hours a week, or 24 hours a week, and you get to get your pay stub, which means you're going to be taxed the highest. Now, again, for those of you that are in the W-2 income category for tax purposes, some of y'all already know this because you are on our Blueprint Game Plan program. So there are creative ways that you can minimize your tax liability. I'm not going to get into those details because I'm probably going to be talking about that if I haven't already talked about it. Have I talked about that already? Yeah, I think last week I might have talked about how to lower your taxes. So I ain't talking about that today. But if you are listening to me right now and you are a W-2 employee, even if you're doing work on the side or got a business or a ministry, but you're still being taxed on the highest level because the income category of labor income, which is a W-2 employee, is the highest tax. If that's you and you don't know any strategies on how to lower your tax liability, since you are the highest tax category, I want you to reach out to me because I want to introduce you to our Blueprint Game Plan program. I really want you to learn and educate yourself on how to readjust your tax liability so that you can lower that liability, because you are by far, as a W-2 employee, the highest taxed category when it comes to income categories for tax purposes. So all you have to do is go to Ramonepreston.com. You can see what our Blueprint Game Plans are about. All of our Blueprint Game Plans are full of information with regard to income categories, taxes, all things financial literacy, entrepreneurship, business ownership. I discuss in detail how these 3 income categories actually work and how you need to navigate yourself through it. Or you can just text "I'm ready" to 404-478-7213. But if you text "I'm ready," please make sure you're ready to purchase a Blueprint Game Plan, because we're going to respond back to you immediately. So if that's you and you know you need to lower your tax liability while you are still in the labor income category as a W-2 employee, I want to show you how you can actually do it legally. This is not something illegal. This is something that the IRS and a lot of financial experts recommend. They encourage for you to lower your tax liability. So the first income category for tax purposes is what? Labor income. This is the W-2 employees. These are the highest taxed. Most people who are in the W-2 labor income category are taxed anywhere from 30, and in some states, some jurisdictions, they're taxed up to 40 to 50% of their income, which means you could be making $50,000 a year, but only bringing home 30, 25, 35. This is one of the reasons why a lot of people can't get ahead, because they're just stuck in one income category. And it's not that they're not making the money, it's just that they're not bringing that money home because they're in the highest tax category. And this is why you got to lower your tax liability. The second income category for tax purposes is active income. Active income. Active income. Now, these are the 1099s. These are the 1099s. So if you are working on a job and you are considered a 1099 independent contractor, or if you don't work on a job as a W-2 employee, but you got a side hustle, you are a solopreneur, you are self-employed. Most people who are in the active income category, listen to this, unlike the W-2 employees in the labor income category who have a job, this is a good footnote, the W-2 employees have a job. The 1099 self-employed contractors, they don't have a job, but they own a job. Did you catch that? You just missed it. You just missed it. I said when you are a W-2 employee and you fall under the labor income category, you have a job, correct? Mm-hmm. You got a job. When you are in the active income category, you're a 1099, you're self-employed, you're independent contractor, you don't have a job, you own a job. Because you don't typically, excuse me, you typically don't own a business system yet. Gotcha. Which means you are making active income. Because if you don't show up, you ain't making no money. So you don't have a job, but you own a job. Am I making sense? Let me drink some Walla Walla then. Y'all caught that? So the active income category, even though you're not a W-2, even though you're not in the highest tax category, you are a 1099 self-employee or contractor, but you are not working a job. You now own a job because you pretty much gave up no risk. This is one, let me stop right here. This is one of the reasons why I don't encourage people to leave their job prematurely.
That's good.
Because why are you going to leave your job where you're making money, and instead of just staying on the job and educating yourself and learning more about financial literacy, learning more about entrepreneurship, learning more about owning a business and about scaling that business and structuring it right, they stop working a secure job to not no longer have a job, but to now own a job. So now you give up a 40-hour-a-week job, making stable money with no risk, to owning a 80-hour-a-week job with all the risk and ain't making no money. You working backwards. And most people who do that working backwards because they're too prideful to wait. And they're uneducated. They don't want to educate themselves. They don't want to put in the work to learn so that their learning changes their earning. Does that make sense, y'all? So the active income category is considered active income because you have to actively run your business. You have to actively get up every day as a 1099 independent contractor, as a self-employee, as a solopreneur, as a network marketer. And if you don't put the work in, you don't get no money out. This is one of the reasons why I recommend people who work W-2 jobs, stay on that doggone job until your 1099 independent contracting or your business or ministry can offset that. If you ain't making at least that much money doing network marketing or being a 1099 independent contractor, if you don't have several seats and stay on that job and stop fooling yourself, especially when you don't want to learn nothing, you don't want nobody to educate you, and you think you done figured life out because you got a good idea on paper, you're going to be around here struggling for 12, 13 years till it hits you that, you know what? I'm tired of living with people. I'm tired of living pillar to post. I'm tired of struggling and losing cars and losing homes and being evicted and being broke. Man, I don't know what it is that got in my throat, but you better go ahead on somewhere. I'm teaching. So do y'all feel me on that? Did I make sense on that? So active income, it is not the highest tax, but it is next to the highest tax because most people who make active income are taxed anywhere from 20 to 30%. And you think, what? I thought W-2 income was taxed 30 to 40%. Say what now? What's the question?
So Eli said first, Ramone, I love your content. God bless you. Then he asked, if I want my business to buy stock, should I make a separate LLC or can the holding company do this?
Your holding company, yes. The question we just got on YouTube was about your company buying stock.
Your business to buy stock.
Would it be better for your business, your holding company to buy stock, or to start a separate company to buy stock? I would buy it from my holding company. Because your holding company is just owning stock. It's not owning the risk in that company. So if that company is sued, it's not like you're going to be sued. At least I don't think you will be, because you own stock. The stockholders or the shareholders or the people who buy stock out of a certain company, if I'm not mistaken, I'm not a lawyer or or legal expert, but if I'm not mistaken, you're going to be protected from the liability of the operation of that business. It's not like if I own stock in a company, they can come sue me because somebody did something illegal or misappropriated their funds. It's just like with Enron. when Enron went down, when Lehman Brothers went down, people who own stock in those companies, it ain't like they went to jail. It ain't like they got indicted. So yes, your holding company is going to be the company that holds assets like stocks or bonds or CDs or copyrights or interests in other businesses, whether those interests are ownership interests or stocks. So I would say yes. I would say yes. Okay? So the active income. Say what now?
He said, I'm misunderstanding your answers. Forgive me.
The same person?
Yeah, so did you get what I said? Okay, he was like, can my holding company buy shares in Apple or something? Or should I make a separate LLC to invest in the market?
No, I would use my holding company to invest in shares in the market, because you're going to be doing what, to some extent, what Berkshire Hathaway, Warren Buffett's company, his holding company does. So you're going to take your holding company. If you have a holding company, you don't have to start a new company under your holding company to invest in the stock market or to invest in shares in a company, whether it's Apple or Amazon, because you're not buying into the risk. You're just buying into the stocks that are available on the stock market. You're not buying into the risk. It's not like you now own the operation of that company, and if something happens, you're gonna get sued. So I would buy the stocks or the shares out of my holding company. One of the things that, like, if you're doing business, if you are operating some type of business, whether it's real estate or any other type of business, that's when you're going to start another company for the operation. But if you're just investing in a business that is doing business, if you're investing in stock on a business that's doing business, you're not investing in the operation of it. So you're not putting your holding company at risk. You're just putting your holding company in a position to actually hold stocks in Apple, stocks in Amazon, ownership interests in another company, so forth and so on. So yes, I wouldn't do another company if you're just investing in stocks. I would use my holding company. So the active income category is the 1099s, right, y'all? Did y'all catch that? So here's the thing. Some people ask, well, if the W-2 worker, the labor income category, if they're taxed the highest at 30 to 40 to sometimes 50%, why is the 1099 independent contractors taxed 20 to 30%? Here's one of the reasons why. One of the reasons why, if you are a 1099 independent contractor, if you are a network marketer, if you are a sole proprietor, if you get in 1099s, the reason why you're taxed almost as high as the W-2 employees is because most people who do independent contract work, they, and I say this respectfully, they think like employees, because you're probably still working a job, or you just left the job and you go into being a 1099 independent contractor, but you haven't changed your mindset about money because you have not learned more about the money game. This is one of the reasons why I push our blueprint game plan so much, because too many people, y'all know I'm telling the truth. People don't like to hear the truth so much, but whatever. Too many people who are trying to start businesses don't know anything about business, don't know anything about entrepreneurship, don't know anything about taxes, don't know anything about income and expense tracking. They know nothing about financial literacy. And how do you know they don't know nothing? Because they don't know how to manage their W-2 income. So if you take the same mindset as a W-2 employee making labor income, and you start a network marketing company, or you start doing hustle work on the side, or you start becoming a self-employee, guess what happens? You are still going to be taxed high because you probably didn't learn anything to do anything different. You probably end up in more trouble. Most people, y'all, and some of y'all know I'm telling the truth on this, most people who go from W-2 employees to independent contractors, most people, I have receipts to prove this. Most people who go from W-2 to 1099 end up owing taxes to the IRS. Most people. You know why they end up owing taxes to the IRS? Because they never learn anything about money. They never learn anything about taxes. So they just do the same thing they did when they was working a job, and guess what happened? Bang! They get that tax bill and realize, ooh-wee, goofy, blue cheese. They realize they just got bust right across the head because they were unwilling to learn what Prophet Ramone and other people like myself are trying to teach. Y'all feel me on that? So the W-2 labor income is taxed the highest. That's one form of income. You got it? The 1099 active income is taxed the second highest. And then we have the third income category for tax purposes, which is passive income. Passive income. This is the EIN. This is the EIN. I'm just using these terms to simplify it so you can understand what income categories are and how you can identify what income category you in. But wait, there's more. Don't get too big for your britches, even if you, there we go again. Don't get too big for your britches, even if you are, I keep hitting that. Don't get too big for your britches, even if you are a EIN owner. That means you have a nonprofit company with an organization with an EIN number, or you have a for-profit company with an EIN. Because some of the income that you bring into your business can still be categorized as active income if you don't know what income categories are, okay? So the passive income is the EIN. This is for those of you who own businesses or you own ministries. You have a 501c3, you have a LLC, you have an S Corp or a C Corp. That means for tax purposes, your business, your ministry, your organization is going to qualify to be categorized for tax purposes as passive income. But it depends on how that income comes in. Okay? Some of that income that comes into your business is not going to be treated like passive income. So just because you got a business and you making money, it don't mean that money your business is making is going to qualify to be categorized as passive income. This is a mistake a lot of business owners and entrepreneurs and people who have nonprofit organizations make. They just think, oh, I made all my money through my business, so it's passive income. No, boo, it ain't passive income because you call it passive income. It's going to be considered passive income when the tax person categorizes it as tax income, as passive income. But when you bring your money through your business, you have a better chance of moving that money in a different vehicle to make that income become passive income. That's the game. That's the game. But I ain't gonna go into a lot of details because some of y'all, if you wanna learn what I'm talking about, you're gonna have to purchase that blueprint game plan. But think about what I just said. You can own a business. You could be making money through your business right now, okay? You could be working a job, you're a W-2 employee. You could be a network marketer or doing work on the side as a side hustle and get 1099s. And you can also own a business. But how is your business gonna be considered, how is your business income gonna be considered passive income? It depends on how you move that money around in your business and put it in the right vehicle so it can be considered or categorized as passive income. Just because your business is making money don't mean it's gonna be categorized as passive income. This is what a lot of people find out. They go to the tax person. A lot of people gonna find that out this year. And unfortunately, a lot of people that I have talked to just within the last year, Every year I go through this. Every year I've been saying this to people for years. And just within the last couple years, I've been saying it to a lot more people. And then within the last year, I've really been saying it to a whole lot of people, because I'm becoming more and more vocal about what my assignment is, to help teach and educate and train people about financial literacy and economics and biblical wealth building and all that stuff. But there's going to be a lot of people who go to the tax person this year with this business, and they're going to claim, oh, I made all this money through my business and I got all these write-offs and tax deductions, and they're going to realize, yeah, but that income was not categorized as passive income. So you're not going to, that money you made over here ain't going to be treated like it is if it was made this way. This is why you got to learn the game. So the 3 income categories for tax purposes are: number 1, labor income. That's typically the W-2 employee. Number 2, active income. This is the 1099, typically the 1099 network marketer, independent contractor. The W-2 employee works a job. The 1099 self-employee owns a job. And then you have the 3rd income category for tax purposes, which is passive income. But even though it is the EIN, business owner or nonprofit owner, you still have to put that income that comes through your business in certain vehicles for that type of passive income to be considered and categorized as passive income for tax purposes. So you won't find yourself making a certain type of money and then you thinking it's going to be categorized as passive income, and it ain't. Like a lot of people say that, oh, well, I'm gonna start a network marketing company and I'm gonna make passive income. That income ain't gonna be considered passive income. For all of y'all that got network marketing relationships, when you go do your taxes, I guarantee you that network marketing company, they're going to give you a 1099 for all the money that came through your business that you was doing to make passive income. I guarantee you, and please come back and make sure you tell the world I'm capping if I'm wrong. I guarantee you that tax person ain't gonna say, oh, all that money you made in your passive income stream of network marketing, or what you did on the side to create passive income, all that is gonna be considered passive income. They're not gonna categorize it as passive income for tax purposes. It might be categorized as passive income for sales purposes, for you to sell your dream to people, or for somebody to sell their dream to you. But I guarantee it ain't gonna be considered no passive income. It's gonna be considered active income. You're gonna be paying self-employment taxes on that active income that you made that everybody else calling passive income. Don't believe that, you gotta learn the game. So those are the 3 income categories. If you have any questions or comments, feel free to drop them in the comment section. I appreciate all of you for supporting us. It's past the hour. I got a gizzo. We got a day ahead of us and an amazing week ahead of us. Remember, invite Lolly Dolly everybody to join you, to join me and my squad on the Ramonepreston Show every Monday through Friday at 12 o'clock p.m., where we are giving you the game with regard to biblical economics. We teach in all things financial literacy, or at least the most important aspects of financial literacy: entrepreneurship, business, ownership, investments, and family legacy wealth building. If you do not have our blueprint game plan, if you ain't got this blueprint game plan in your life, this is the 5-step wealth building system that I have put together. It is an online, virtual, video-based education and training program that walks you through 5 steps to build wealth. Each of these 5 steps are going to direct you to hundreds and hundreds of video-based training modules so that you can learn the most important aspects of financial literacy, similar to what I'm talking about today. This is in our blueprint game plan. You're going to learn the most important aspects of entrepreneurship, how to be an entrepreneur, what is an entrepreneur, how to go from being a hustler, go-getter, grinder, to an entrepreneur into a legitimate business owner. We have an entire holding company program to show you how to start your holding company, how to structure it, how to actually scale it. And we have a do-it-yourself module in there to show you and walk you through each step to get your EIN, to file your LLC for your holding company with the Secretary of State. We have an entire residential and commercial real estate investing program to teach you the most important aspects of residential and commercial real estate investing. We also have forms and documents and resources and links all in our program. And we're in the process of adding an entire new program, absolutely free. It's gonna be available to everybody that's on our Blueprint Game Plan program. It's gonna be centered around family legacy wealth building. And I'm already living it. My family, we're building a family legacy of wealth. I'm bringing my siblings and my children and grandchildren and even some of my spiritual children into this ecosystem that we're creating. And we're going to add that entire program to our Blueprint Game Plans because we really want each of these 5 steps to be practical, but to be successful in your life. So if you would like to purchase a Blueprint Game Plan, if you would like to be a part of our coaching program, I just sent a message out to our Blueprint Game Plan clients and to a few people that were on our list of our text list, and I don't think I sent an email out yet, but we're in the process of introducing a coaching program that's going to be life-changing. I'm doing something supernatural this year. Me and my daughter, my PA, we've been strategizing and talking, and my wife and our squad, and we're putting together a program that's going to be a game changer. I'm talking about a coaching program. My goal, I have a certain number of people that I want us to bring into this coaching program, and we're gonna spread it out for 9 or 10 months for the rest of 2021. And in this program, we want to push everyone that joins it to at least 6 figures. To at least 6 figures. To at least 6 figures. Period. Yep. That's what we're going to do. So if you want to be a part of it, you need to reach out to us. All you have to do is text, "I'm ready" for the blueprint. If you want the blueprint, text that to 404-478-7213. If you want to be in our coaching program, this is going to be a major commitment you're going to have to make for the rest of this year. But if you want to be in our coaching program, you need to text coaching to 404-478-7213. If you're not ready, don't text. Don't be capping, because I'm going to call you out. I'm going to start getting a list of names of people who capping and start calling them out on social media. I love y'all. I want y'all to have an amazing day. I'll see y'all tomorrow at 12 noon. Please hit the like button, hit the share, leave feedback, put comments in the comment sections, whether they good or bad. I don't care. I read haters' comments as well. They just make me better. Truth is, for a hater to comment on one of my posts or one of my videos or one of my lives, it does me well because it lets me know you had to see me and hear me and to some extent know me. The program is in addition to the Blueprint Game Plan. Yes, the coaching program is in addition to the Blueprint Game Plan. Even though you don't have to have a Blueprint Game Plan to join the coaching program, okay? You don't have to have a Blueprint Game Plan to join the coaching program. If you have a Blueprint Game Plan and you join our coaching program, I'm going to deduct the difference from the coaching program. So whatever you pay for the Blueprint Game Plan, I'm going to deduct that difference for the coaching. I'm telling y'all, we're putting together a coaching program that's going to change a lot of lives.
I'm in it.
And my goal, you in it?
Yeah.
You been in it. What you mean? You got a built-in cheat sheet for life. You already in it. So I love y'all. If y'all want to be a part of that coaching program, I haven't even put it out in public yet. I've only shared it with the people who are already on our Blueprint Game Plan, and I think I sent it to a couple other people that were on our list. But I'm doing a certain number of people, and I'm not giving you one of them sales pitches. So it's not like I'm going to have room and time in my schedule, because it's time that we're investing. to put this together for this group of people, because I want this group of people to hit 6 figures. I want this group of people to hit 6 figures. And it's going to be a commitment, but guess what? It's going to be an investment. And it's going to be worth it. So if you want to be a part of it, reach out to me. I love you.